Okay, let's continue from Ghana, where the finance minister, Seth Thekpa, says the West African state is targeting 5.4% gross domestic product in 2016, up from 4.1% last year, as the administration of President John Atta Mills aims to reduce inflation to 10% this year, from a record 17.7% in 2015. Provisional figures showed the fiscal deficit at 7% at the end of 2015, lower than the initial target of 7.3%. According to the finance chief, Ghana aims to restore rapid growth after a slump caused by a fall in commodity prices and a fiscal crisis in West Africa's second largest economy. Another African country in the business of mining is South Africa, and that country is currently hosting the annual conference on mining investments. It's continuing today amidst concerns over safety in the sector after an incident last week in which 87 workers were trapped on the ground following a collapse at a gold mine in the northeast region. Known as the Mining Indaba, the gathering of industry executives and investors from around the world is held in Cape Town on the backdrop of an economy built on resources like gold, diamonds, and platinum, but currently in the doldrums.
The World Bank says South Africa's economy will slow to just 0.8% in 2016. Weighed down by uncertainty over policy, gaps in infrastructure, and drought. South Africa's mines are the deepest and among the most dangerous in the world, but industry fatalities have been falling, a trend rooted in improved safety practices and a shrinking labor force as production declines.
The issues of safety, as I've indicated, remains our priority. We are going to work tirelessly to engage with all our stakeholders. That is why we brought names of those primary right holders who were able to adhere to the request and gone a full 12 months without a fatality. We are encouraged by that. We're saying to other right holders, let's follow suit.
Mining firms in Africa are struggling due to weakening global commodities prices. The price of platinum has fallen about 30% year on year, forcing miners to sell assets and cut production and jobs in South Africa. Around 2/3 of the industry whose mines are damaged by a 5-month strike in 2014 are making losses. However, some industry players are upbeat that there are better times ahead.
Obviously, we're in a very challenging period. Having said that, I think what you'll see over the course of the year is that companies that have done the hard work, that have gotten their balance sheet in order, will continue to perform nicely even in this reduced commodity market. And on the commodity-specific side, I think what you'll start to see is individual commodities will outperform.
Nigeria, the continent's top crude oil producer, is also set to overhaul its mining sector, which has been largely unproductive and dominated by small-scale artisanal miners who comprise around 80% of the industry. Minister of Solid Mineral Development Kayode Fayemi said the country had completed a review of its mining licenses and will publish the results next week as Africa's largest economy looked to grow its nascent mining sector and diversify away from an over-reliance on crude oil.
Nobody sees Nigeria as a mining destination. If you ask anyone, they will tell you Nigeria is an oil and gas destination. And they've forgotten that this used to be the coal capital of Africa once. It used to be the tin capital of Africa. Nigeria has one of the largest deposits of limestone and bitumen in Africa. Not to mention precious metals, gemstones, all over the place. But we have to do our duty in order to attract the investors.
Nigeria first started mining activities in 1902 and has at least 44 known minerals, including gold, iron ore, tin, and coal.
And I will talk about Nigeria now. A new report has been released by Exotic Partners based in London, and they're talking about the state of Nigeria's banking industry in the face of declining oil prices, credit risk, and the FX issues, sensitivities to it. How strong are Nigerian banks if we go for a devaluation, or if things go lower with oil, where if we go back to 20 or less dollars per barrel? Let's bring in Nashwa. Nashwa Saleh is the head financial credit research at Exotic Partners in London. She's joining us live this afternoon for a few minutes discussion. Nashwa, thank you very much for coming through.
Hello, thank you very much for having me.
Thank you very much. Okay, and Nashwa, just a quick one there. Give us a summary of this report about the state or the resilience of Nigeria's banking sector in the face of declining oil prices, credit risk exposure to the oil sector, and FX on the other hand. Talk to us about this kind of a pyramid.
So basically, our main thesis, because the perception of the movement in oil prices and also the impact of a potential valuation on the bank's balance has been quite negative in the market, as you have sell off in the prices of the bonds at the beginning of the year. Our main thesis was actually to dispel some of the myths around the financial soundness of the bank, because we have found that the shock
across either the credit book or for the FX book do not result in major changes in capitalization. If anything, the banks are quite resilient because of the initial conditions that they are starting from, the level of capitalization, and the internal capital generation capacity of the banks. So just to give you an example, for a 200 basis point deterioration in credit risk, the coverage of the NPLs would only go down to 60%, and the capitalization would only be impacted by a drop of 100 basis points. And if you're starting from an initial condition where the sector capitalization is quite healthy because of the onerous requirements of the Central Bank of Nigeria in terms of minimum capitalization levels, 16% for the systemically important institutions, then you can see that in a time of stress like this, the banks are actually coming into this period with a significant buffer to deal with the stress.
Nashwa, if Nigeria finally decides to devalue the local units, say 10, 20%, how resilient do you think the local commercial banks are to prevent things from bottoming out?
With regards to the FX stress test, actually the banks are also quite resilient to a move in the FX rate. If you assume that the banks are fully matched in terms of their assets and liabilities, then you would expect a neutral impact of a devaluation on the banks, but an impact on the borrowers who might not be matched. If you assume that the banks are having some sort of open position on their balance sheet within the prudential limits, so nothing which is above the prudential limits, and that we have more loans in foreign currency than deposits in foreign currency, then actually the repricing post a devaluation would be favorable for the banks. And I think the relevant quick calibration to look at would be for every 10% movement in the exchange rate, this would impact capitalization by 30 basis points.
Okay, let's hang it in there for today. Thank you very much, Nashwa Saleh, head credit risk research at Exotic Partners in London. We thank you for your thoughts today, and we apologize for the audio quality today, a little bit poor. Thank you very much from Exotic Partners. Let's move on to one of Africa's poorest countries, Burundi. Tax revenue down 17% in the last quarter of last year, compared with the same period in 2014. And that's due to months of political violence sparked by President Pierre Nkurunziza's disputed decision to run for a third term. The 8-dependent Central African nation, whose economy relies on coffee and tea exports, is embroiled in one of its worst crises since the civil war ended in 2005. 9 months of strife has killed more than 400 people. The Burundi Revenue Office said it collected 157.8 billion francs in taxes in October to December period 2015, down from 191.32 billion francs for the same period in 2014. We'll be back with a new index for sub-Saharan Africa. How resilient and which countries are among the top 5 within the continent? You'll be surprised what the figures tell you. We'll be right back with that.